The top business stories live from the Sky News City studio. Tesco predicts that food inflation will continue to fall as it reports a big rise in profits. An unrelenting sell-off in bonds pushes up implied borrowing costs for governments around the world. Plus, I'll be speaking with the executive chairman of Aston Martin as the British luxury car manufacturer bids for overall victory at Le Mans for the first time since 1959. Good afternoon, this is Business Live with me, Ian King. Tesco has today urged the police to work more closely with its stores to tackle the growing problem of shoplifting. Ken Murphy, the chief executive, said today that Tesco had created a hub that collects data on serial offenders and that it would be happy to share that with the police. Well, the news came as Tesco reported an adjusted operating profit of £1.482 billion for the 26 weeks to the 26th of August. That was up 14% on the same period a year earlier and better than expected. Tesco also upgraded its forecast for that measure for the year to between £2.6 and £2.7 billion, and that sent its shares up 3.75%. Mr Murphy said food inflation had fallen during the period and that he expected to continue doing so during the next 6 months. Well, in other news, business activity in the UK services sector was at its weakest for 8 months in September, according to survey data published today. The Purchasing Managers Index survey, in which anything above 50 represents growth and anything below that a contraction, came in at 49.3. It was down from 49.5 in August and represented a second consecutive month of contraction, but it was higher than the earlier so-called flash reading of 47.2 for the month. The composite PMI for September, which also takes in manufacturing, came in at 48.5, down from 48.6 in August and signalling the fastest reduction in private sector output since January. The Competition and Markets Authority has approved Hitachi's proposed acquisition of the rail signalling business owned by the French electrical systems giant Thales. The regulator had previously warned that the €1.7 billion deal could substantially reduce competition in the supply of signalling systems for mainline and urban railway networks. In response to these concerns, Hitachi offered to sell its existing mainline signalling business in the UK, France and Germany. The CMI said it was satisfied this would preserve competition and prevent customers such as Network Rail from being hit by the deal. Now, the executive chairman of Aston Martin Lagonda has told Sky News the luxury car maker will press ahead with the launch of its first battery electric vehicle in 2025, even though the UK government has just pushed back the date of its proposed ban on new petrol and diesel vehicles. Well, Lawrence Stroll was speaking as the company announced its future entry to the hyperclass class of endurance racing from 2025. The move would allow Aston Martin to bid for its first overall Le Mans 24-hour victory since 1959.
My intent, as soon as I took over as executive chairman, to be able to get the opportunity to run the Valkyrie as it was designed, in the passion for speed. And with the new hypercar rules coming into Le Mans WEC, it was very appropriate timing to enter, and we will be entering for 25, both Le Mans as well as the IMSA series.
How much will this cost you?
We haven't, it's being budgeted at the moment. It's a very expensive proposition, one that I really cannot disclose at this time.
Is it possible to put a tangible value, though, in terms of what entries into racing like this and into F1 adds to the brand?
Well, speaking from experience now for 2 years from F1, is completely transformed Aston Martin. When I took over, the history of Aston Martin goes back to racing 110 years ago. We've won 19 victories in our class at Le Mans in the past 20-odd years, so racing's a very big part of it. But going into Formula One, the highest echelon of racing, as I say, has transformed the business, has brought us 50% new customer base to Aston Martin Lagonda that never shopped Aston Martin before, brought us a much younger generation of client that we've now seen buying our Vantage F1 sports cars and our DBX 707 SUV. So it's you got 2.3 billion people watching the races every single year and see our British racing green Aston Martin going around the track and getting on podiums is really helps to create the performance nature behind the brand.
I think you said recently the Valkyrie was an insane car to have undertaken, even more complicated than F1.
No, I didn't say that exactly. I said it was a very difficult car to manufacture. It is insane to drive in a good way, not in a bad way. It's, it's got over 1,000 horsepower, more downforce than a Formula One car. So having been on the track with it a couple of weeks ago, I could tell you it is a hair-raising experience and insane in a very exciting way.
So it's a pleasure to drive.
Oh, it's a great pleasure to drive, particularly on the track.
Now, you're due to start production next year of the Valhalla, your first plug-in hybrid supercar. How many do you expect to deliver in the first 12 months?
We expect to deliver about half the production in the first 12 months. We've planned 900 cars. We should be delivering about 450 per year.
And what's the order book looking like?
75% sold out. So we're sold out for the first year and a half of production.
And what sort of people are looking to buy the car?
Obviously, car enthusiasts. Will be what we call a supercar. We think will be the world's greatest supercar. It'll be our first real hybrid vehicle. We will also have an electrified front axle. So it's very, very sophisticated, a true driver's enthusiast car.
Are these customers who are new to Aston Martin or people that you are predominantly already known to you?
No, mostly new to Aston Martin. We've had a large following for all the years. We've obviously made front-engine sports cars. So with the introduction of Valhalla is our first mid-engine sports car after the Valkyrie that we're doing in greater numbers. So most of these customers are new to the brand.
And then obviously your first battery car is expected in 2025. Could that slip now that the UK government has pushed back its deadline for the ban on petrol and diesel cars?
No, we're still planning to launch our first electric vehicle in 2025 as planned.
And what will the order book look like there? Again, are these going to be new customers again to you?
I think there'll be a combination of both. I think we'll have, if I would have to guess, we obviously haven't started the order book yet. We haven't launched the car. I would imagine 50% would be Aston Martin current customers and 50% would be customers who are more focused on electric vehicles.
And from where will you be sourcing the batteries?
That is still to be determined.
Right.
Most of our components, as you know, we announced Lucid as our technological partner, so most of that will be coming through them from the United States.
Looking at the UK government's strategy on battery EVs, are you comfortable that the UK is putting on capacity in battery manufacturing sufficiently quickly?
You know, the EV really started as a craze a couple of years ago. It was people's top of mind was EV. Obviously, we have seen that the consumer response to EV isn't quite as there yet as the manufacturer's response was to EV. So I think it's the whole EV process is not going as rapidly as one thought 24 months ago.
And you've just raised, your UCI consortium has just raised your stake in Aston Martin Lagonda to 26.23%. What was the thinking behind that?
Thinking is very simple. I firmly believe in the success of the company. I think this company is severely undervalued today. And when there's an opportunity to buy a large chunk of shares, again, based on my commitment and belief in the future, I jumped at the opportunity.
Well, we're going to stay with motoring now, because if you want to invest in car dealerships, you've less choice than you used to. Marshall Motors was taken over last year. Lookers agreed to a takeover last month, and Pendragon looks like it's going to go the same way. Well, one of the remaining listed players in the sector, though, is Vertu Motors, owner of brands such as Bristol Street Motors and Macklin Motors. Today, the company reported an adjusted pre-tax profit of £31.5 million for the 6 months to the end of August. That was up 11.7% on the same period a year ago. Well, joining me now is the Chief Executive of Vertu, Robert Forrester. Robert, good to see you again. It looks as though some of the log jams of new car supplies that we've talked about in the past have started to lift.
Yeah, Ian, that's certainly the case. We're getting more supply through. It's more consistent, and all the issues post-COVID seem to be going away. We're now obviously into a period where there's increased electrification coming through, but overall we're seeing a more normalised market.
And what about the used market? What are you seeing there?
Our demand's fairly stable. clearly, within a period of higher interest rates, the interest rates that customers are paying are higher. That is causing some issues, I suspect, around affordability. But electric vehicle used car values have stabilised really quite nicely. We're buying electric vehicles for the used car market. If there's an issue, it's probably in the higher end premium, where those interest rates on a high capital balance make so much of a difference.
Now, you touched on electric vehicles just now. In the statement today, you note that demand for electric vehicles remains muted. Why do you think that is?
Well, it's specifically retail demand. So that's private consumers coming in. I think there are very mixed messages coming from the government. The government actually said a couple of weeks ago it was going to move the ban from 2030 to 2035. I don't actually believe that's really happened in reality. There's very robust demand from companies for ESG reasons, but also due to the tax breaks for electric vehicles for company car users. So I think the demand is split. Retail is fairly muted, but corporate demand is very high.
Other things being equal, what proportion of the sales mix would EVs account for these days?
About 17% overall, but that's very skewed towards the fleet markets.
Right. Now, you also note in the statement that from January, some battery electric vehicles are going to attract tariffs under the rules of origin provisions following the UK's deal with the EU post-Brexit. As things stand, a lot of governments are trying to push that back, including the German government and our own. Are you optimistic that they will succeed?
To be honest, I've got absolutely no idea, but it makes absolutely zero economic sense. So you'd hope that some sense would prevail in the powers of, in the corridors of power to actually see this one off. This is, I think, broadly the last thing that the UK or the European manufacturers actually need. And there are enough transitional turbulence in getting electrification in without this additional problem.
Presumably, though, Robert, this is an absolute nightmare for you. You're trying to set your budgets for the next 12 months. You're trying to anticipate what demand is going to be, and you're having to factor in potential tariffs that push up prices for consumers.
Well, I think we'll know by the time we get to our business planning, to be honest. And let's be fair, British business is well used to change and unexpected events. I just think it's just part of being in business at the moment, and just have to handle it as best you can.
Now, when we last spoke, you just completed the acquisition of Helston. Is that properly bedded in now?
Yeah, we're really pleased, actually. It was 28 dealerships down in the southwest of England. We've grown the Vertu brand down there with lots of sponsorships, Plymouth Argyle, Exeter Chiefs, Somerset County Cricket. All our systems are in place. Still lots of work to do, as ever, but integration's gone very well.
And what are you seeing more broadly in terms of consumer confidence just now? I mean, you touched on EVs just a moment ago. What about the wider market?
To be honest, demand is holding up pretty well, I think, actually. It's pretty resilient. I think that consumers, you've seen consumer confidence rise. A lot of car purchases are necessities, particularly in the used car market. The car breaks down, they need a new car, they have another baby, they need a bigger car, move house, have a new car. It's really in the discretionary top end where I think we're probably seeing a little bit more turbulence, but it's fairly steady as she goes, to be honest.
Rob, it's always a busy day for your results day. It's great that you could spare the time to chat today. Thank you.
Thank you very much.
Well, still to come here on Business Live, it's been an absolutely wild week in the bond market. So we're going to have a look at how the markets have fared this afternoon after this short break. Don't go away.
5 of us have made it out of the car.
Welcome to Backstage, the film and TV podcast.
I just took a shower above the clouds. You know why? Because this is the Emirates A380. Fly Emirates, fly better.
Welcome back. Well, as promised, we're going to get to the markets in just a moment, but we're very briefly going to break out of the business news and cross to Las Vegas, where Dwayne Davis is appearing in court charged with the murder of the rapper Tupac Shakur. The hip-hop star was shot dead in the Nevada city in 1996. In the past few minutes, we've heard from the Clark County District Attorney, Steve Wolfson.
Today, he is presumed innocent until a court proceeding, a criminal justice system, proves his guilt. Today was the scheduled arraignment, but he can't be arraigned until he has a lawyer. Mr. Davis announced that he has retained a lawyer. I believe his name is Edie, spelled E-D-I, Fall, F-A-L-L, who is a lawyer out of California, is my understanding. Lawyer Fall couldn't be here today, so Mr. Davis asked for a 2-week continuance. That's why the judge put the case over, I believe, until October 19th for his arraignment. That is when he will formally enter a plea of not guilty, I believe, and then at that point, the judge will set a date for jury trial. So that's...
Well, the big story in markets all this week has been the unrelenting sell-off in government bonds around the world. The yield, which rises as the price falls on 30-year government gilts in the UK today, hit 5.115%. That was the highest level since 1998. Meanwhile, the yield on 10-year government German bunds hit a 12-year high, and 30-year US Treasuries remain close to a level last seen in 2007. That has spilled into unease on the equity markets. European equities finishing largely to the downside. CAC and the DAX in Germany more or less broke even at the end of the session, but it was a sell-off for most of the day. Talking points include SAS. The Scandinavian airline fell by as much as 95% today on news of a financial restructuring that will save the company from bankruptcy, but which will all but wipe out shareholders. Well, here in London, the FTSE 100 has fallen for the third consecutive session in a broad-based sell-off led by some of the oil and mining heavyweights. The FTSE off 0.75%. In terms of the big percentage fall as well, they were led by Imperial Brands and British American Tobacco. That followed news that Rishi Sunak, of course, is proposing to ban sale of cigarettes for younger consumers. BAT off 1.75%. Imperial Brands, I think, fell by 2.5% or so. Not too many blue chip gainers to mention, but Tesco finished up 4.25% on its results, which, as I said earlier in the programme, were better than expected. Outside the FTSE, well, again, a big sell-off among the mid-cap stocks. The cybersecurity equipment provider Spirent, former FTSE constituent, that is off some 31% following a profits warning. But Superdry has risen by 16% after confirming a story from Sky's Mark Kleiman. It's selling its intellectual property assets in South Asia to India's Reliance Retail. On the foreign exchange markets, well, the pound has risen against the US dollar for the first time in a week. Sterling up 2/3% nearly against the greenback. Sterling also up about 1/10% against the euro. Single currency up by 0.5% against the dollar. I think the dollar, having had a really strong run over the last week, is just taking a pause for breath here. As for the oil price, well, that is sharply lower on concerns over the global economic outlook. A barrel of Brent crude will currently set you back $87.39 a barrel. That's off nearly 4% on the session. Joining me now is Lucy Coates, Investment Director at JM Fin. Lucy, good to see you today. Talk to me about the bond markets. Why are we seeing this big sell-off around the world?
Well, it's only the third day of the fourth quarter for investors, and there seems to be a sort of sense of crisis now in the bond market. The bond market's 3 times the size of equity markets, and it's a real barometer for the economic forecast ahead, looking ahead. And certainly bonds at the moment are very cheap and equities look expensive. And both of those at the same time can't be right. So we're looking back, in 2020, bond prices rose very sharply, being a safe haven when the pandemic hit. Then in 21, we discovered late in the year that inflation was no longer temporary and it was going to be more permanent. And then roll on 2022, and we've seen rates rise exponentially and very, very quickly. And so bonds are just at the moment trying to assess 2 scenarios. One is that we're going to see, a benign economic recovery in the US where we've got good jobs data. It seems relatively resilient. Or are we going to head for a hard landing and a recession? And at the moment, the bond markets seem to be telling us the latter. And that's certainly going against what the Bank of England and the Fed are telling us.
Absolutely. And of course, the important thing for people who may not be up to speed on government bonds is that these are implied government borrowing costs. This will have implications for the Office for Budget Responsibility as they prepare their forecast for the autumn statement.
Yes, the largest holders of government debt are governments themselves and the central banks. And we've certainly seen, Japan is the largest holder of US treasuries. And at the moment, because of the decline in the yen, it's unlikely that they may well be tapping into US treasuries to support that currency. Those are the rumours that are moving around in the markets at the moment.
Lucy, obviously, a lot of central banks, most notably the US Federal Reserve and the Bank of England, are involved in unwinding QE now, quantitative tightening, if you like. Could these moves in bonds stop them from doing that or make them pause for breath? Yes, definitely.
It's in no one's interests to have high yields on bonds. Ultimately, governments have borrowed huge amounts of money since 2007, 2008, and one sort of feels that this impact is very much at the start in 2007, 2008. It's just repeated itself with government printing money throughout the pandemic and etc. And we've just created a much bigger problem. And we're seeing a massive fiscal stimulus also in the US. So there's an awful lot for the bond markets to just try and assess. But at the moment, it's not a good environment for equities. They're really struggling at the moment, which we're seeing a big sell-off. And that's because of where bonds are and what the bond market's really telling us, which is we may be looking at recessions sooner than we thought.
Now, the big UK equity story today was, of course, Tesco's results, much better than expected. What were your main takeaways?
These are really good results from Tesco. We've seen, importantly, margin improvements. So we've gone back to pre-pandemic levels at 4.4%. It is cutting costs within the business. It's also passing on savings to the consumer. So I think suppliers into Tesco are having to sort of take the margin squeeze more. But it's showing an awful lot of balance sheet resilience. It's been really good performer, and certainly it's one of the leading, as you've highlighted today, one of the leading performers in the FTSE 100 today. OK, Lucy, got to leave it there. Hopefully see you back in the studio next time. Nice to see you this afternoon. Thank you. Thank you. That's it from me. I'm back with our morning edition tomorrow at 11:30. Hope very much to see you then. In the meantime, do stay tuned. Coming up after this short break, it's the News Hour with Mark Austin. Thanks for joining me this afternoon. Cheerio.